What a letdown. Nvidia earnings beat the expectations, but not by enough to make investors happy. And the result? Well, a nice little 3% gap down is forming that we should prepare for. And of course that'll act as downside pressure for the broad market as well. So welcome to the Trade Brigade Midweek Show, where we'll look through all of the data points, including Nvidia earnings, and build a game plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description. And stay tuned until the end of today's show. I've got 2 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off with a closer look at the SPY daily time frame chart. What do we see here from a trend perspective? Well, over the last 7 trading days, we've been stuck in a trading range, a balance, some may call it. And of course, we know this is happening in the context of having made a higher high. So any pullbacks on the daily chart are really still in service of searching for a higher low to continue the new uptrend that we've formed from point A up to point B up here. With Nvidia's news after hours, the current bid-ask spread is somewhere around 555.10, 555.20, 19. It's trading low 555s. So the forecasted gap down as of right now, this is 6 o'clock on Wednesday, subject to change by 9:30 tomorrow morning, but it's right near today's low. And what that indicates to me is if we open below the bottom of the multi-day range, which is really 557, then a higher low pullback can unfold, and that's fine, right? If we open in here, we'll look for bearish rejections of 557 and then possible breakdowns through this pivot high to test the gap from underneath us. When we test the top of the gap at 549, if we test the top of the gap, I would reinforce the idea that the daily 50 SMA is going to be meeting us there for confluence and super support. If we catch buyers off of that level, that'd be a great spot for a daily higher low. Heck, if we go a little bit further and close the gap from, remember, this Thursday session back here, that would also be a great spot for a daily higher low. Remember that there's really room from point A to point B for a higher low anywhere over what I would consider the line in the sand here at 537. So bring on the pullback, bring on the daily higher low. That's okay if the daily chart opens and stays below tomorrow into the end of the week, 557. Now, what I want to talk about quickly, though, is the candle structure prior to Nvidia earnings, right? If I just clear this up, we've talked about trend. Obviously, upside continuation takes care of itself. We're looking at all-time highs and blue sky territories after that. But let's focus on today's daily bar outside of the context of Nvidia earnings. What is this? It's a hammer. It's got a longer lower wick. It looks underneath the lows of the balance range at 557. And then let's ask ourselves the question, were sellers able to close that bar under 557 in the regular trading hour session? The answer is absolutely not. So if we just take this directly down to an hourly time frame chart, what this would have actually started to suggest is a look below and fail on the balance range, right? Here's the balance. Look below and fail number 1, look below and fail number 2 is a possibility. So something that I want to use as sort of an if-then statement is if we are opening on a move underneath 557, then we are looking for 557 rejections to target 553 for something like Thursday's session and then possibly Friday if the bears do retain control and it's supported by bearish internals, then great. We'll look for the continued daily pullback into the top of the gap 549 and possibly 544.85. Those are the downside levels that I would really be preparing for if we open tomorrow and stay tomorrow underneath 557. Now, this whole thing, the whole bearish pullback idea evaporates if the markets do 2 things. Number 1, if we open over 557, right back in balance, right back in limbo, I really wouldn't look at this as an overly aggressive opportunity to get short the market. As a matter of fact, I would probably be more bullish on the fact that Nvidia earnings were not enough to send it lower. It was a look below and fail, and my target would be at least the top end of the range, but the better trade outcome is likely going to be the clearance of this balance range on a break and higher low Brigade bolt over 562.50. So the market's trading in a very well-defined range at this point, and I really do believe that your Thursday session is going to be determined by which side of 557 we're trading on. If we open below and reject downside targets we've just talked about. If we open below and Brigade bolt into the range, as soon as we set this higher low on something like a 15-minute time frame chart, maybe even a 5-minute time frame chart if I want to get a bit more precise, I would be willing to entertain longs off of 557 for risk reward that starts to look like this to complete the look below and fail trade, right? When you look below and fail, there's your higher low, the target's always the opposing end of the balance, which in this case is 562.50, the top end we were just describing. If you open in range, I would be looking for buy-side setups first off of 557 because of the failure here and because the implication would be that the market made this move in the overnight. It did not stick, and by the time we opened up, we're back inside of range over 557. So first thought is to see if we can find support here and then rotate back up to the top end of the range. Same concept. So that's really my top focus into Thursday morning's open. If we bring out a couple of, let's go ahead and bring out some fibs. Of course, this will be a rinse and repeat since we really didn't make much of a new high. But the 38.2, 50% fib is in line with the sort of bottom end at 557. That checks out to me. If we bring out the anchored VWAPs intraday, you'll also notice, I mean, we're supporting the anchored VWAP here. If we get back over 557, you're in the middle of the cluster and possibly rotating to the top end gets you above all three. From there, I think it's just a patience game until we get some sort of Brigade bolt for the all-time high over 562.50. So in terms of adding confluence at the levels, I do like what the Fibonacci's we just saw and anchored VWAPs are suggesting. I wouldn't throw in the towel yet on the long side and say, oh my goodness, this market has to go to hell in a handbasket. Not the case based on the analysis of what we have in front of us here. Let's jump on over to the market internals for the NYSE side of things. If you're not familiar with this screen, check out the video tutorial in the top right-hand corner. So today's session opened in range in value. We knew that based on the pre-market prep. And of course, there was a bit of an aggressive sell-off that happened today. And let's see what actually took place at the exchange level. Were the volume outflows aggressive? No, we did not get underneath negative 300 million. This to me supports the idea that this is still a pullback in the context of an overall uptrend. Sure, we broke from balance, but it's not like there's been this huge shift in sentiment at the exchange level. Otherwise, this would have been underneath negative 300 million, sort of an equal opposite to what we had on Friday of last week, right? If we look at the advanced decline line, was it in or near trend lower zone at any point today? The answer is no. I mean, yes, it's negative. Yes, it did reject the zero line. So I'm not trying to mask that we had a bearish breakdown today, but I'm talking about the context of the overall move. It's more of a pullback in an uptrend, as we've sort of stated. If you look at the index score, it was very negative intraday, but this is an intraday indicator. This should not tell you, or you should not read into the index score for those of you who have purchased it and are maybe interested in like how it works exactly. That's an intraday indicator. That is not something that you use on a day-to-day basis. It can support the fact that, yeah, it made sense the market was down today. If it was divergent, that would be a different story, but it's not really something we carry forward in the narrative, right? This measures from the open and then it resets the next day. If we're looking at the cumulative build out of the tick, I mean, yes, it was red, and again, making that same acknowledgement, it was red, but was it negative 5,000? Absolutely not even close. The worst read we had was negative 2750. That's really not indicative of exchange level. Oh my goodness, dump everything. Markets are going to hell in a handbasket. So when I look at the internals, when I look at the price action that actually unfolded, this initial look below and fail, outside of what's happening with Nvidia, and it looks like we're already up 50 cents off of the 555 we were talking about a minute ago. This to me is still just like mild consolidation, bullish consolidation near these highs. We have not lost any levels yet to the point where I would say, oh my goodness, buckle up, there's a big trend reversal incoming. On the daily time frame chart, I would start to express some concern just to play devil's advocate. I would express some concern if there was like a big gap fill down here, and then we set some sort of lower high in the future underneath 557, underneath this balance. Because now we're starting to think, okay, what's the opportunity for a daily lower high? The weekly really just has an equal high, right? We know that the NASDAQ's a little bit weaker, the tech sector's a bit weaker, right? So that would be a concession to the downside, but that's happening in the future. First thought process at these levels to the downside, 553, 549, 544.85 is where do the buyers step up and where can we get involved for a daily high or low pullback to reverse back in the upward direction. So that's my take here out of the S&P. If you're really intent on trying to trade this short, I'll come in here with the red crayon and just show you real quick. I would want to see like a breakdown here and something that offers a lower high underneath 553 to trade to the top of the gap. When we get here, once again, it is a reassessment. Do we find a double bottom? Do we find an inverted head and shoulders? Or do we close the gap? Then it's a rinse and repeat. Double bottom, inverted head and shoulders, hammer candle on the hourly charts, 15-minute signs of reversal, right? Anything around these levels really becomes interesting. And I think, we've beat this dead horse enough, but really just a balance range if we're back over 557 with the opportunity to rotate to the top, citing the look below and fail formation, right? Let's move on over to the market profile and let's just be thorough here in the investigation. So if you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. Got to make a couple of concessions for the bears. First and foremost, we made note on Tuesday, headed into Wednesday today, that value was actually higher on the Tuesday session here. Well, that didn't really hold up for much of a bullish indication off of this Wednesday open to break out and retrace some of this thin structure. That obviously was not the case, and value did shift lower on the bar-to-bar count for today's session. The point of control is also notably underneath, not really underneath. I take that back. It's definitely underneath the prior day's session, but it's not underneath Friday's low. And if you recall from the Saturday update video, we were really focused on Friday's low, which is also confluence with the Tuesday low of that previous week, right? So this to me represents the bottom end of the balance range, and the point of control was sort of right at the bottom end of the balance range, if not slightly above. If you're looking at the distribution of volume, it's sort of bulked up at the bottom end of the range. It's not firmly down underneath, suggesting something like a B-shaped profile, long liquidation, and oh my goodness, buckle up, the markets are about to get nasty. Not really the case. So the look below and fail makes the most sense to me if we can sort of stay over, or get back above, I should say, in the ES futures. We've been tracking something like 5610, right? If we can get over 5610, that would look pretty good for an opportunity to get some thin structure retracement. You do have some single prints out of the market profile between 5625 and 5630. That would act as a first target, and then the top end of the range, which as we know is 5660 on the ES futures. That's your full completion of the look below and fail, right? So there's the ES levels combined with the S&P levels. Let's jump back on over to the platform here and take a look at the QQQ NASDAQ, which of course is slightly divergent and more bearish, right? One of the things that we've been noting is this big opportunity for a weekly lower high. We did not close this gap. The trend count is still up though, and I think we want to talk about this for a moment. If we're thinking about the move from point A to point B up here, this is still a strong uptrend, and of course we can't ignore the fact that we also have a higher high in the trend count. So currently, yes, the pullback is a little bit more aggressive. You're seeing a close underneath the multi-day range, underneath the daily 50 SMA, but is it possible that you're still just searching for a higher low? I think the answer is yes. And recall that this gap close is actually the top end of this balance from back here. I would like to see some sort of support either right here off of these lows or even on the gap fill reversal at 465.25. If we go lower than that, the line in the sand on the daily time frame chart is closer within striking distance on the NASDAQ. That's 459.50. If the pullback continues, this would be my line in the sand here. Need to stay above that. Otherwise, why are we underneath this previous balance? I thought the progress made here would have been strong enough to kick you back off towards the all-time highs and not revisit or get below, even worse, right? Which is why this is the line in the sand. You don't want to be below it, right? 459.50 is that number. In the post market, we're currently trading at 466.50 by 60, give or take. So that puts us right around 466.50. A little bit of a gap down, minor gap down underneath today's low inside of this gap range. So let's bring it on down to the hourly time frame chart. We're all set here, right? This looks like a pretty actually typical bull flag into a possible area of support, gap fill reversal. If we can hold this and start to move back in the upward direction, this is looking like a pretty solid long over 475, back up to the equal high, if not follow through to close the gap there. So bulls want to see this. Bears, of course, want to see it, slowly chugging along to the downside, and more importantly, a loss of that 459.50. Let's get on down to that hourly. We can see a couple of things here. First and foremost, on the SPY daily/hourly, it was more of a very clear balance range. You did not have a series of lower highs and lower lows. On the NASDAQ, that's clearly not the case. You already have a very well-defined hourly downtrend with multiple lower highs and lower lows. This is a downtrend. So in order to reverse this and get some sort of bullish play out of the NASDAQ, a couple of things I would want to see. If we're anticipating an open here around 466.50, that's instantly going to provide a lower low. So we're not out of the woods on the hourly chart. All right, so then what's the next step? If you open here, you need to see a Brigade Bolt higher low over the previous day's low, which is right here and the top of the gap, ultimately at 468.35. If we can pull that off, you start to suggest loosely an inverted head and shoulders, and that would be the beginning stages of an hourly trend reversal to then take it long. If you could spot the break of the neckline, that's great. You could take it long into the retest level right here at 475, but better than that, as we just described on the daily, would be a higher low over that 475 for a pinch, back up to the top of the range, and possibly looking for follow follow through at in the future, I should say. Of course, the bears are probably like, dude, you're insane, lower low, that means you should be looking for a lower high here. Absolutely, that is a threat, and that is an issue out of the NASDAQ chart. When and if we approach 475, that is where your sellers, if they're here, are going to be waiting in limbo, looking to short a lower high opportunity to continue the hourly trend in the downward direction. So a little bit of no man's land here in between, I would argue. This kind of, let's just go with the ultimate gap close, 465.25, looking for that daily, we'll go with a DHL shipment here, daily higher low versus 1 hour lower high possible threat off of 475. So in this zone, you got to exercise some caution. I would prefer to trade longs that look like this, reevaluate here, stick with the longs if we can Brigade bolt back into the range. If you're noting that we get some sort of double top, I mean, there's nothing wrong with trying a short there. If you could try to pull off risk reward that then looks like this back in the downward direction, be my guest. It really, I think Nvidia intraday tomorrow is going to have a lot to do with that, and we'll take a look at that chart in just a couple of moments, but those are your major inflection points and where the trends will change and where I think that there are executable setups. Really, 475 retests, and down here, gap fill reversal over 465.25, some sort of open on a lower low, something that does this. There's the inverted head and shoulders we were just describing, trades into this in the first place, reevaluate at that level. Been pretty clear about the expectations here. If you wanted to use some trend lines, if you wanted to draw in a trend channel, you can do that. There's nothing wrong with this. You guys know I prefer horizontal levels, but from bottom of the trend channel to the top of the trend channel, where's that resistance? Same spot. So not a shocker there. Let's bring out the anchored view apps intraday. You are getting a cluster of those things barreling down on 475, probably supporting more of the bearish thesis. It's also the daily 50 SMA mixed in there. And we'll also take out the Fibonacci because, of course, this is a 100% retracement from the Thursday gap up low. But just to go through the exercise, are we underneath the 61.8? The answer is yes, and that is 475. So if I'm looking at supporting evidence like 50 SMA, like anchored view apps like Fibs, yeah, this is a pretty big threat there at 475 that can possibly keep the market bearish. Of course, what we didn't talk about and describe is if we open on this gap down, fail to produce a higher low back inside of the previous day's range, and fade underneath 465.25. This is a short all day long to get back into that daily line in the sand for the higher low at 459.50 that we were just referencing, right? And this would be a major, major, major test for the QQQ NASDAQ. Let's jump on into our NASDAQ internals, and we'll see if the selling pressure was stronger here. It is. It is. So I think that this really goes back to what we were describing in the Saturday update as well, where if you're going to try to long the market, the S&P is where you want to be. If you're going to try to short the market, the NASDAQ's where you want to be. Notice that the volume outflows were substantial on today's session, unlike the S&P 500. So shorts make more sense here. You were in trend lower zone on today's session, and you also opened near it on the Tuesday session. The cumulative build out of the NASDAQ, much, much deeper, and we actually got a nearly negative 8,000 into the close. So yeah, shorts do make much more sense out of the NASDAQ versus your S&P 500 if you can spot sort of this rejection in here and the breakdown to get to your daily line in the sand. Once again, that's 459.50. Or if it rallies first, fine. Let it rally. Don't try to long it if you're a believer in the short based on the evidence we're walking through so far, and look for the short here. Right? Let that risk reward play out. Let it play out as follows, back down to the low and possibly ballooning runners into that daily line in the sand. That's your NASDAQ. Let's take a look to finish it off at the NQ futures though, just to make sure we're not missing any glaringly obvious indications. No, I mean, through this entire time, value has been progressing lower. You had it here, you had it here. Here is, of course, Monday. Tuesday was slightly higher. Wednesday, definitely lower, and point of control is clean underneath the previous day's low. It's underneath the Friday lows, right? The two equal lows from back here. So much more bearish progress out of the NASDAQ. And I think that 475 level, it's going to be spot on, right? There's really no issue with that. It boils down to this right here, 19,550 we could call it. I think we've been using 19,600 in the pre-market shows, right? And that really represents more of your Friday low. If you're underneath that zone on the NQ futures, I wouldn't really think about any upside interaction. If you notice that the market's getting strong, and this is just purely a market profile play right here, if you notice the market is strengthening, if you notice, wow, market's throwing all caution to the wind, doesn't care about Nvidia earnings, it's just a rocket ship back to the upside. If we're trading around here, I would totally be focused on Tuesday's high as a poor high in the NQ futures. That's in need of some repair there at 19.7 flat. right at 19.7, psychological number as well. If you could take that out, it would be, I would think, a thin structure retracement at minimum to 19.8, about 100 points of range to possibly be thinking about based on that market profile nuance right around over here. Let's jump back onto the platform and we will finish up the broad market with none other than small caps. Back to a daily time frame. Emphasis. IWM daily, what do we see? A little bit of a pullback, but again, key question boils back down to trend on the daily at least. Is this an overly threatening pullback? The answer to me is no. The most impressive part that we talked about on the Saturday update video, right, was the fact that there was a recapture inside of this balance range on that Friday move. So we've given back some of it, most of it, but not to a degree where I would say we're losing the key area that needs to hold. And we all know that this is 215, prior support. It's where the sell-off stopped. Rejection. As long as we're over 215, I would tend to think that small caps have a nice breakout, a pullback in the context of a new uptrend, right? You had highs, new highs, pulling back for a possible higher low to hold 215, and it's a swing right back up, hopefully, to the top end of the range overall, closer to 225 flat. So the daily chart does not seem to be a threat here out of IWM, and of course, with less exposure to Nvidia in the first place, you're not really seeing an after-hours move that is overly detrimental. Let's take a look at the hourly time frame and see what else we can learn. Again, balanced in here, mild pull. Like the other thing to point out is that this is a thin structure breakout, right? Which in theory means that there's very little volume commitment at price. A thin structure should be retraced fairly rapidly. Did we have a rapid breakdown today? I would argue no. It was a very slow and controlled pullback. It was not a panicked pullback. It was not a liquidation break, everybody selling and hitting the panic button. No. Mild pullback, as long as we can support over 215. In the grand scheme of things, it's bullish pressure or sustained neutral pressure for the S&P, and any reversals would be seen as a tailwind to support bullish moves in the S&P. And if we break under 215, more concerns would step in. I would probably be, bearish here and definitely bearish on a loss of 213 to trigger some sort of previous double top, right? Obviously, it's not a double top anymore, but you get the idea. Maybe it builds out as some sort of head and shoulders. Very speculative as of right now, but I think it just lends itself to talking about 215. If we're above, it's not really much of a threat currently. I would say into the end of the week, if we get an open in range here at 217 flat, and we get a break to move over 219, that would be a pretty decent, helping factor to at least keep the S&P neutral, if not try to act as that tailwind. And at that point, you're just dealing with the inverted head and shoulders, right? So just really think in terms of levels and where the trend will change. The hourly trend is down with lower highs, lower lows, right? It's a pullback. We know that. The daily can find a higher low over 215. If we reverse the hourly trend via some sort of higher low and a breakout to a higher high, that 219 recapture puts the pressure to the upside on the S&P. We could take a look just to be congruent at the intraday anchored view apps. You're still above the majority cluster in here at 215, which makes sense based on the structure as well. And this makes sense also for a possible breakout being more bullish over 219. If we bring out the Fibonacci's from the Thursday gap up from way in the past now up to here, flirting with the 38.2, definitely not suggesting anything underneath the 61.8, and lo and behold, it is that 215 level anyhow. Let's jump on into the Russell market internals, specific to the index itself. And what do we have here? No strong volume outflows, not in trend lower zone today. And the cumulative build is, we got to give some respect there. It's down around negative 2,300. Typically a strong read for the tick, out of the Russell at least, is going to be something like 3,500, 4,000 on the Russell side of things. So maybe a little bit of continued pullback wouldn't be unreasonable. Maybe we don't want to jump the gun on the reversal, but nothing here that's overly detrimental, suggesting that 215 is just going to get absolutely obliterated on any sort of continuation. Let's go to the Russell futures on the market profile. And we'll finish the job on the broad market, move into our sectors, and we'll take it from there. Value continues to progress lower. Unlike the ES and the NQ, value on Tuesday was completely breakaway to the downside, which is fine. But again, look back to your left. This thin structure over here didn't really see acceleration. Notice that the value, it's not technically, let me do something like this so we can extend it. It's not completely overlapping in a clean way where I would say it's balanced, but it's definitely not breakaway to the downside where value was like here inside of the thin structure from that breakout last Friday. So once again, the pullback seems respectful so far. I'm not overly concerned with the performance of small caps acting as an additional headwind to the S&P on top of what we're already getting out of Nvidia earnings. Let's bring it on down to the broad market sectors. So the S&P sectors here, weekly performance is always up first. What do we see? Financials are leading the pack, up 74 basis points, followed by consumer staples, then healthcare. Financials look good, and they're a heavier weight risk-on style sector, but staples and healthcare, much more D for defensive. Now, does that make sense? Is that okay as the market's balancing in this range? I think the answer is yes. I would be much more concerned about the sector posture if that was the case and the market was was making new highs. Because we don't have an attempt at new highs yet and it's not being led by the wrong sectors, fine. Posture's not really the end of the world. Semiconductors are at the bottom end of the barrel. Then we have the tech sector and consumer discretionary. Again, makes sense considering the balance that we're stuck in. Let's check in on the structural charts. Financials up, and away. Plenty of room for a higher low pullback over the previous all-time high from here at 44. There's really no additional commentary. The chart is bullish. It can afford a pullback. It's not the end of the world. XLP, consumer staples, new highs. Absolutely, just hanging out up here. Bullish consolidation is technically upward pressure for the broad market. Just remember, it's D for defensive. If this continues to push to new highs and it pushes the S&P to new highs, I would start to flag that as an issue. I would not be confident in an S&P bringing in new highs if it's based on XLP. XLV, healthcare, new highs. So you see the theme here. It's very difficult to call for an overly aggressive bearish move in the broad market when everything's hanging out near highs with opportunities for higher low pullbacks, especially noting XLV is still your third heaviest weight sector by market cap. If this was like inside the range and threatening a move lower, whoa, red flag, but just currently not the case. Let's move along to the bottom end of the barrel with this jump over here. So the semiconductors, we've got to be honest, right? This chart does not look good. And it looks more similar to the QQQ NASDAQ with this offering of something like a weekly lower high. But the structure here out of the SMH is actually a bit more concerning because of the neckline, right? It's clearly rejecting a technical area. You could still argue that there's an opportunity for an inverted head and shoulders or something like this on the daily, and that's fine. But to be more confident in this chart for like the next move out of semiconductors to remain bullish, you've got to get clearance up and over 255.70, and Nvidia earnings are definitely not helping, getting us a little bit lower here, closer to 232.65. 232.65 loosely just generally in this area, small gap down for tomorrow morning's open. I would say it's do or die to hold on to 228.50. If there's an opening drive lower on the gap and go, I would look for 228.50 to support. If it does, still trying to maintain that optimistic and bullish stance in the S&P. If there's nothing at 228.50, I would just sort of let it go, and I would say time to look for shorts in the QQQ NASDAQ. So using the semiconductors as a big proxy for the broad market, as a big gauge for the broad market, is going to be helpful into the end of the week. And again, that level, that key line in the sand has to be 228.50. Anything that gets back into this range here, really more neutral, and I would dial back the short expectations. XLK, what do we see out of the tech sector? Similar to the QQQ, same commentary as the SMH, lower high. What I think is different about this, obviously, is just the fact that we're still, not anymore based on the Nvidia earnings, but the fact that today's regular trading hours pullback was pretty respectful over the top end of this balance. The current after hours trade price is pretty spready, 214.90 by 215.67. So let's just say that it's somewhere around this range on the forecasted open. I would prefer that there's an opening drive and a recapture of 218. Once again, that's the bull take here. The bear take is gap fill reversal. Gap fill reversal keeps you bearish, and you're probably rotating at least into 212. Anything beyond that gets really dangerous for your S&P 500. Watching those levels like a hawk, again, 218 and 212. I would prefer that the gap down gives a, if it's an extension, support 212, move back higher intraday, that would be bullish. If it's a gap down, gap close, I would prefer for high and tight consolidation, something that looks like this. That aligns more so with the daily trend in the S&P 500, right? If I'm thinking back to the S&P, I'm not going to fight it. If the market's clearly showing reversal and back down under the opening print, I'm not fighting it. But what would be helpful to align with the daily trend being up on the S&P is a gap down that fades and trying for acceptance around 218, not fading off aggressively. Let's move along to the XLY. Similar commentary, not much of a, just a rinse and repeat. I would say that you need to hold your higher low here to indicate some sort of inverted head and shoulders. Things get much more bullish if we can get a break for the next leg up and over 188.75. Currently, looks like a mild move to open lower near the lows based on Nvidia earnings. Obviously, Nvidia is not in the XLY, so let's move along. Energy sector, it's done nothing over the last bit. It's really more so stable. It's volatile, but it's stable inside of this range. I'd be more impressed with energy when it decides whether or not it's over or under We've got 94.80, and in here I would really lean on the 87.15 coming from this reversal breakout point back here, right? So nothing to do out of energy. We'll continue to monitor it for the global demand for oil, how our global economy is doing. So not much to comment on currently. TLT is pretty stable. We want stable rates, stable bonds. That's fine. XLC, this looks bullish to me, threatening a possible break into blue sky territories. Plenty of room for a higher low on the daily over 85. Right back in the bull territory. So we obviously have concentrated risk in the tech side of things with semiconductors. Outside of that, things look pretty darn good. Real estate with the anticipation of rates making a new swing high, perfect, bullish. Utilities, very bond-like, just continuing to sort of put in bullish consolidation over the 75. No issues with this, posture-wise, not an issue yet. XLB materials, top end of the range, wall-to-wall move from bottom to top. Wouldn't be surprised if it consolidates for a little while. A breakout there, a new swing high would be instrumental. XLI industrials hanging out at new all-time highs. Indecisive doji on today's session over this prior rejection, trying to act as support. Nothing bearish to say out of a name like the XLI. Let's jump into the ratio grid and see what's going on from this perspective. You can see that we've got the XLK. I would argue that maybe it's a bit of a stretch if we can recover off of this Nvidia earnings move. If we can't, then this is just going to be a big time lower high. It'll continue to act as a red flag. XLF making it, near the highs. My apologies. Near the highs is a good step, but ideally as it's making new all-time highs and the S&P is not, this should be through the relative high on the ratio. XLY is a threat for a lower high, noting that there was not much of a hold here for a inverted head and shoulders, right? It's still a possibility, but this move to the 50 SMA should have gone through if that was going to be it, and this was going to act as a stronger sense of a trend reversal. XLP is sort of sitting in limbo. It's not totally risk off, but it's not risk on. Same thing happening here out of utilities. The market's sort of like precariously propped up in this balance range out of the S&P 500, and this gap down open tomorrow morning under or over 557, I believe, is just going to be the most obvious tell for what we should be thinking about, how we should be acting, and we already walked through those sort of situations, but the ratio grid here is not giving us much insight into risk on versus off. Should you be overly bullish? Should you be overly bearish? If we look at some specialized ratios, a nice recovery here. It's possible that you set some sort of higher low out of SHY XLK. That would be a good first step. XLU XLK, not looking great over in this one. Just noting that it never really recaptured a key level here, remembering that this came from head and shoulders neckline. This still has the opportunity, but you would want to see it break out, right? Obviously, this pullback's been mild, but get us over, and now we'll start to have more confidence. XLY, XLP is this one at the key level. It's got to hold a higher low, like right here, right now. I would say that discretionary, it's better than tech in a vacuum, so perhaps watching for that. And if we look at the semiconductors versus healthcare, this is likely going to open on some sort of gap down tomorrow morning based on the discrepancy and Nvidia earnings. So that, of course, would be slightly more risk off over here. The Japanese yen carry trade is a long lost figment of the market's imagination. I would say that people have already moved on from this. It has moved lower towards this sort of bottom end, but it hasn't really done anything to indicate the S&P is in jeopardy. And we know that the reasoning behind that is, first of all, markets have short memory spans, but also secondly, the Nikkei index is recovering and staying pretty stable quite well. This downdraft is really due to some of the downward pressure out of the dollar. Speaking of, here it is, right? Downward pressure out of the dollar has caused that yen pairing to move lower as well. So, with a lower dollar, in theory, that's bullish for U.S. equities. So the relationship's sort of been broken, and we know that the general correlation between the yen and U.S. equities was never really that great to begin with. It's just when it becomes a focus, and it's more of an unwinding of something. If we look at gold, it's still stable up near these highs, maybe a bit more of a risk-off indication. If we look at interest rates, stable down here. We know this. There's been no change out of interest rates, inverted to the TLT basically. This is good. Stability out of rates is good. Volatility in rates is volatility in markets. Let's move along to the inverted ZT. The contracts just rolled the other day, so mind the gap down. It's not really a gap down. If you were to uninvert this and just think about it in the opposite sense, right? And then we can turn on what we want to adjust for contract changes. There we go. Basically unchanged in here, which, think about this. Think about this like the Fed cutting rates. If we break out for a big move, probably higher odds of a 50 basis point cut. If we just stay stable here, pretty stable odds of a 25 basis point cut, right? And speaking of, let's move on over to the Fed tracker tool and see what's going on with that. Right on the money, right? So with the inverted ZT being stable, also getting decent odds still of that single rate cut. I still believe that this is the appropriate path forward. I think a double rate cut is irresponsible. personal, like a little bit of personal bias stepping in, but a double rate cut is going to send real estate prices higher. I'm already seeing it in my local market, and housing prices, generally speaking, are already about as unaffordable as they've ever been. So that would be an issue for services inflation. It would not come down. I think the Fed would have to battle round 2 of inflation, and that would be a huge policy misstep if they cut rates too aggressively here. We all know that based on the calendar, this week, we have initial jobless claims tomorrow morning, expecting 232,000. Preliminary GDP is also slated to come out. The expectation here is 2.8. I'm not sure I'm a believer of that, noting that the Atlanta Fed GDP Now estimate has been revised down substantially from 2.8 to 2%. So be expecting something on the light side there. I think the market knows that. I wouldn't be shocked if this does not hit the forecast, basically. What else is going on here? PCE into the end of the week might be insightful, but probably not really. The reason I would say that is because CPI has already been released. We know that there's a small uptick in services inflation outside, housing services inflation, but outside of that, it's been pretty stable. So not looking for anything new out of that, maybe just reinforcing the pre-existing data that we got earlier on in the month. And the main event, I would say the next big thing to watch out for is the Labor Day week. You're going to get a bank holiday on Monday, of course, but forget about manufacturing PMIs. It's the jobs report, right? It's the really heavy-hitting jobs report. It's the detailed reports. We get JOLTS job openings. We get the ADP non-farm on Thursday that week. You're going to get ISM services PMI. That'll be insightful based on the cost breakdown versus new orders. Then you're also going to get the full Monty of the report on hourly earnings, true non-farm payroll, and the unemployment rate. Typically, this genie is very difficult to put back in the bottle, and Jerome Powell has been very clear that he does not want to see further cooling in the labor market. So, watching that, but that's next week. So, into the end of this week is not really something that we have to be concerned with. What we should start talking a little bit more about, of course, is Nvidia earnings. And why did Nvidia beat the expectations, but why is it still moving in the downward direction? Well, I've got a number of reports pulled up for you, and we'll take a look at them in just a second. I do want to give honorable mentions to CrowdStrike, Salesforce. That's really it. Lulu is going to be interesting after the close tomorrow. Dollar General before the open could be insightful. And again, both of these really from a consumer spending perspective, right? Lower tier consumer, higher tier consumer. And again, that's just based on price points. I'm not saying that rich people can't shop at the Dollar General, and I'm not saying that poor people can't shop at Lululemon. I'm sure it happens all the time. People spending hundreds and hundreds of dollars on pants who should probably be buying Target specials for whatever. I bought Target specials for a long time, let me tell you. Anyways, who am I to tell you what to do? Let's talk about Nvidia earnings. Let's jump into a couple of things here that were a bit of a concern, right? These are the actual reports, and I've got a couple of different quarters pulled up. The first thing, this is this quarter's, or the most recent release, what came out tonight. Gross margin is down for the first time here or not for the first time, but just generally on the comparison, it's down. We did not hit a growth on gross margin, which is possibly disappointing for investors. The other thing that specifically caused the market, Nvidia really, to move lower during the call was commentary that Blackwell's production needed to be, I don't know about reevaluated is the right word, but just sort of like they were making adjustments to Blackwell's production. They still think that there's going to be a ton of demand for Blackwell. They're seeing continued demand for the latest chips that they're implementing, of course, and all the CUDA stuff that they're doing. Like, I'm not trying to take away from that, but the comment about Blackwell and the implementation and the process there little bit shook the market up, right? So that paired with the sort of lack of gross margin expansion here from previous is the first concern. The second concern is that if you look at the quarter-over-quarter results here, this is the first quarter where we've had less than 20% quarter-over-quarter improvement, right? So up definitely on everything but gross margin, but not more than 20%. If we look at the previous Q1 and take a look over here, notice that we had 20%, 20%. And you could really just, if you want to keep it simple, compare diluted earnings per share, right? There you go. So up over 21%. If we go to the quarter prior to that, right? And notice also the gross margin was improved there. If we go here, what do we see? This was like one of the knockout reports from Nvidia. Quarter over quarter, it was up 33%. Right? So basically what I'm getting at is the lack of surprise. Look at this one, up 50% on a quarter over quarter. This was Q3 of 24. Just absolutely unbelievable, right? Huge net income up 49%, almost a double. On a quarter by quarter basis. Just incredible numbers that they were posting. That, of course, is slowing down. And this is just like the law of large numbers, right? You're not going to have this euphoric boom happening forever. And I think the market was maybe pricing that in a little bit. But now that we're actually seeing it, up 12%, that's kind of, in my view, why Nvidia technically reported good numbers, but the market's responding non-favorably, right? So anyways, that's a quick run through of the actual report. Let's get on over to the platform here. Let's finish up I guess what we'll do, just to not be too disjointed in the analysis, is we will take a look at Nvidia. You can see it's sort of suppressed down near these areas. If we jump in with the market maker expected move, which we've drawn in here, let's go with clean, not cleaner. You'll notice with numbers that were fine, again, beating expectations, but not to the degree. The surprise was not large enough. It's a down move, but it's not even close to the market maker expected move at 112.40. I mean, a lot can happen between now and 9:30 tomorrow morning, but generally speaking, this is not nearly as impressive of the previous two earnings reports we've seen out of Nvidia. And I think that for the most part, we're going to apply gap rules. We're going to take it in stride. You've broken down clearly from an overhead balance, and it just becomes all about, is there a daily high or low? The daily trend is up. Is there a daily high or low DHL shipment that we can participate in? All right, let's get back to risk appetite charts by going over to let's go bonds relative to themselves. TLT ratio is fine right now. This continues to suggest risk appetite is strong. Notice the new lows and just consolidation here. It's not really a strong uptick as the market was breaking down today. That again, risk appetite remains stable. Credit spreads, a little bit of an uptick here, but still flat out of the lower version. SHY, HYG, not an issue. Again, risk appetite seemingly strong. Junk bonds continuing to remain elevated and trending versus stable and sideways out of the S&P. Risk appetite remains elevated. And once again, I think all of this ties into the narrative that we're looking at nothing more than a reasonable pullback on the S&P daily, not an Armageddon-style crash again, like the yen carry trade panic. If you look at Bitcoin, people panicked over the weekend, or overnight, I should say, on this one. It really, just like the broad market, has the opportunity for a higher low. The concern is just that it's continuously rejecting this overhead range. So possibly a smaller risk-off indication, but paired with, or rather contrasted with, the HYG and the other more market-related, not crypto-related indications, I wouldn't say it's a threat. If we look at total breadth, the SPX A200 and 50Rs both look fine up here. They're hovering right around 75%. That's great. If we look at new highs versus lows, an expected downtick, as this week we've broken from the balance, but no issues with that. If this was starting to get negative, I'd be concerned. It's just not the case. If we look at the RSP, jumping over here, what you can see is an awesome opportunity for a possible higher low above. In the post-market, trading right around let's call it 174. 174 is what? I mean, it's literally right here unchanged. Not as much volume flowing through in this equal weight index versus the actual S&P. But generally speaking, again, this has to be more of a bullish indication, speaking to, in the broader sense, pullback in the context of a reformed uptrend, basically, in that S&P. Let's take a look at the QQQE. This is still trading about 1-to-1, so not as bullish, and that ties in with the narrative already that we're bullish the S&P, bearish the NASDAQ if we're looking for that shakeup. We haven't checked in on the Dow transports versus industrials and Dow theory in a while. I would just point out that we did, technically speaking, make a new all-time high out of industrials, and transports are still lagging that with a lower high, so carry that forward as possibly a bearish divergence, but I wouldn't short the market solely based on it. If we look at the VIX, volatility is remaining elevated over 15. I'm curious to see whether or not volatility gets sucked out of the market tomorrow when Nvidia earnings are in the rearview mirror. So this is almost a wait and see. I'm curious as to whether or not we do like a quick update video tomorrow after the close, just to see how Nvidia earnings shook out in the regular hours session, right? So VVIX, I should say, volatility, still elevated, did not make a move to complacency zone yet. And we also saw a huge uptick out of the one-day VIX today. I don't know if you guys monitor this intraday, but generally speaking, this thing was off to the races. Kind of a concern there. Watching to see if it rejects. If it rejects, ideally this just instantly gets back down underneath 1275. If it remains elevated over 1275, that would start to be sending some warning shots across the bow. Let's jump on over to Mike from Barefoot Sailing Adventures. If you're listening, that one was for you. American Psycho Mike, that one was for you. Shots across the Boston Whaler bow. Let's jump back on over to the core list of companies, though. Let's get the job done here and finish up tonight's episode. Microsoft, what do we have? We've got ourselves, I would say, an interesting spot in the sense that this higher low, yes. This lower high on the hourly, yes. It's the competition of timeframes. I would still lean into the fact that the daily/weekly is trying to form this downtrend here. We've not really held on to this level cleanly on this attempted break. A couple of hammers back here never resolved higher. The 200 SMA has been tested. So generally, I'm a bit I've got mixed emotions out of Microsoft in between these two levels. If we can just balance here and then, really look for something cleaner here or cleaner there, I think those are going to be your better opportunities. We're already getting some of that. If we go on down to the hourly chart here, what do we see? So straight shot from top to bottom, bear flag consolidation, post markets 407. 407 brings us somewhere in here, high 407s though. So really just opening near the lows of today's session. If the market opens up and Nvidia is going for a gap close, I would expect Microsoft to do something that looks like this, and the target would be back to 416. Definitely reevaluating when we get there, thinking about short opportunities for a continued lower high, even at this point a daily lower high, right? You're getting a counter trend, lower high is set, and possible continuation reverses the daily trend. So really tough. And if you notice, like as this initial breakdown was taking place, it's not like we had one strong move that just like instantly got us there. It's been a very grindy move through this territory. So I'm really leaning into that, and really, this week has been kind of a grinder. It's been a grinder. It's been a week to manage expectations, and the chart structure here kind of agrees with that based on what I can see. If we look at Apple, another one, manage expectations, grinder, look above and fail again. Upper wick has sort of failed that 227.75. We've adjusted the level slightly here. If we bring it on in, we had 226. We've moved up to 227.75. Obviously recapturing these highs a little bit more firmly in the flag. Opening print of today's session, clear rejections underneath. So long as Apple's below, I would think continued balance in here, and I would just really, again, dial back the expectations of anything impressive. Not a good name to trade recently. So let's just move directly along to Nvidia, which we already talked about briefly on the extended hours there for a second. But the forecast open is around 117. So let's bring in here 117, opening something like this. So the framework is very simple. You can tune into the pre-market prep tomorrow morning and we'll talk about it in real time. But generally what I'll be looking for is the gap fade, right? We're going to open here. If we fail the overnight low and move through the opening print, I'll be looking for longs to tag up to the bottom end of the range. And I'll get you that level here for a second. Let's go ahead and bring out the default set. We're opening around 117, so right around in this key zone, mind you. If we can support it, I think that's a great opportunity. Like, just from a trend following perspective, great spot for a possible higher low, to be honest with you. Earnings really weren't that bad. Yes, it missed like the percentage surprise beat, but really not bad numbers. If you could support here, close the gap and battle for acceptance back in range, maybe there's some sort of trendline break in the future that gets this thing back up to highs. I don't want to be overly optimistic. And again, this is a gap down, so let's mind that. But generally speaking, the gap fade off of this level for upside seems kind of, I wouldn't say like a top watch, but definitely something to keep eyes on for tomorrow. And also, just simply put, if Nvidia closes the gap, that's going to be bullish pressure in the S&P. I would probably be looking for that range rotation to the top end in the SPY itself. That's the Nvidia chart. Let's take a look at Google. Google is a look above and fail. That is starting to like solidify itself. So very simply put, this is a balance range. Look above and fail should target the bottom end of the range. That's at 156.50. If we take it on down to the hourly time frame chart, huge liquidation break off of the open underneath this. You could call it a descending triangle. You could call it a double top, whatever you want to call it. Doesn't matter. The watch here is if we currently are opening around 160, let's go 161, almost 162. So 162 is right here. If we pinch higher, that's fine. Let it go. And I would rather position for shorts on a lower high here at 164.75. Rotate back to the bottom through the thin structure into where the value is found. If we just open weak and stay here, I would look for a Brigade bolt underneath 161.50 to target the bottom end of the range, 156.50. So Google is probably one of the cleaner charts that we've looked through so far, which is kind of ironic considering that this range back here was painstaking. Let's move along to Nancy, see what's going on with Amazon's daily chart here. First and foremost, grinder to the downside. Did not give any indications of a gap fill reversal, no indications of a hammer off of the 200 SMA green moving average on your screen, but it is starting to support over this breakout point. That's the lower wick from today's session. As we drop it down to the hourly, you're going to see a similar chart to Google where it's a straight shot lower and some consolidation into the afternoon. So my watch here would be really focusing on this 172.25. If you could spot a rejection of that, I think that the downside march just continues. Very clear opportunities for these sustained lower highs. I would be targeting at least the equal low, and then from there, on a second test, I would not be short here. Instead, I would say, is this possible for an hourly trend reversal to get some sort of daily, right, retest of this? Break, Brigade bolt, possibly some kind of higher low gets set here. Lows, higher lows. It's a possibility. So second test of this level, I would be thinking about what's the opportunity, right, even if it looks like this, whatever, what's the opportunity for some sort of reversal off of this 168.75? Doesn't mean you can't short for point A to point B. But when we get back to B, I would start thinking about this into the future, right? I think I've been pretty clear about that on Amazon. Next up, Metaverse. What's going on with Zuckerberg and the Fantasyland? Continued mild downdraft. One of these things that I think you want to read into as a trader is, when we're breaking for these new lows, are we getting acceptance on those lows? Is the market accelerating under those lows, or is it really lackluster? Like this first day was a great day to be short the meta move, right? But now, as it's really broke and lacked follow through there, it's becoming less and less attractive for new shorts as you're making these incremental lower lows. So in my head, I'm thinking I either need to see a stronger retracement into 524.25 to set up clean risk reward that looks like this back to the downside, or set up another balance range, and then maybe there's this into the future. So one step at a time. To be bullish here, you've got to get the inverted head and shoulders pie in the sky back over that 524.50. We can all see that clear as day on the hourly time frame chart, right? So if it's going to be bullish, you got to accept here, and you got to do something that looks like this, looking to execute risk reward here, probably up to this, honestly, the opening print around 537.50 to give you an updated level on the fly. That would be your upside trade there. And the downside trade is just, okay, we test this, struggle, and if we can short this, right, that's what you're looking for, and then ballooning runners into that deeper level at 503.50. That's Metaverse, both up and down. Next up, we've got Tesla, Mr. Musk and the rocket ship. Not so much a rocket ship, more of a boring company, but this probably reminds me more closely to Amazon with the retest of a big old previous breakout level. If we can get a rally attempt, shorts off of 212 are fine for a possible lower high in this area, but start thinking about the double bottom. So just take exactly what I said about Amazon and rinse and repeat it here at Tesla, 202.75. All right, 202.75 Tesla is your key watch. And again, that's based on, if we look at the daily, trying to support over this breakout range there. Daily 200 SMA as well, 202.75. That's that. JP Morgan financials breaking out to new all-time highs. No issues with this one. Continues to be a grind. Some intraday madness, if you will, with the retracement. But generally speaking, as long as we're over 219, looking for continued blue skies. If we break down underneath it, you trigger a little bit of a double top there. There's probably a short that starts to unlock a pullback. But just be mindful that the pullback's likely just maybe a day or two to get into this zone. And then I would start thinking about what's the opportunity for reversals on the retest of the previous highs. 1, 2, 3, broke out, Brigade bolt higher low over 215.75. Next up, Netflix. Can't really seem to make it happen up here at the all-time high, starting to suggest more of a double top. This neckline is in play for the remainder of this week. This is actually a beautiful watch, right? If you're looking at this, you sort of set the bear flag into it. If you just get consolidation that's in here, 680s, you start breaking down below, I think you've got a pretty clean opportunity and some runway into that 663.75. So watching that out of Netflix, seeing if we can set that trade up. If it fails, you're probably going to have to stop out, and I'll stop out with you on the short side. And then I would just sort of treat this as more of a balance if it fails and comes back in. To be long, I would need to see, okay, failure back inside. This might change my tone to a long because it's a thin structure retracement, and it would sort of imply inverted head and shoulders. So trying to play the what ifs. Again, we'll have to stop out. If it triggers a short and it comes back into range, we'll take that one on the chin, but that's how I would navigate the Netflix, primarily thinking about shorts based on the lack of acceptance near those all-time highs twice. Next up, AMD. AMD, sympathy to Nvidia, yes, opening around 140.40s. 140.40s puts us down here on a gap down underneath a pretty key level. Let's go to the daily so we don't get this one mixed up. Yeah. All right, so AMD, no longer really thinking of mild pullback over a level, really coming from this consolidation, that balance. More so thinking gap rules in play, more so thinking if it drives lower. If we get a gap and go out of AMD, I would try to look for support to come in at 136, noting that you're at the lowest low of the cycle. If again, big if on that statement, if you find buyers at 136, which might look something like on the hourly, you open on the gap down, right? You get a drive lower, you test higher, you break it again, invert it, like all the classic indications we're looking for. But if you spot buyers at 136, if you're a level 2 watcher, you could watch the tape and see if you could spot, people just passively buying it, and then getting aggressive on a reversal. That would be something to watch. But 136 extensions seem to me to be somewhat in play, just as purely a pure technical play off of 136, right? So watching out for that. That's AMD. That's the core list of companies. I've got 2 additional ideas for you. MCD McDonald's is up first. The All-American Heart Attack. What do we have? Taking a look. This is a beautiful Head and Shoulders, failure to break out over the range, failed today, and broke underneath the neckline. So as long as we're under 287.15, looking for a thin structure retracement off to our left to tag up to 282.40. Looking for shorts out of McDonald's, overhead supply weighing on price to the downside. It's not in play if we open or end up back in range for tomorrow. That's 287.15 trades into 282.40. Next up, we've got Starbucks, SBUX. This one's getting a lot of talk, and there's a nice little breakout over here. But what happened today? Nice little failure. So seeing Starbucks fail underneath 96 now implies to me that very similarly to McDonald's, if this is going to be a range, look above and fail. If we get consolidation under 96, just looking for the rotation into the lows, the opening print of the gap up on the CEO shakeup is looking like 91 flat. That would be your downside target there. Round numbers only, you guys know the rules, right? So risk reward would try to be set something that looks like that. And that's an opportunity based on the failure of the buyers to accelerate on that range break. That's going to do it for today's episode of the Midweek Market Update with our deeper dive into Nvidia earnings. We brought up a couple of reports there, which we don't often do. Hopefully you found that or valuable, I should say. And we'll just check back in one more time. Not even close to the lower edge of the weekly expected move. So pretty much a respectful move, bit disappointing, but not terrible numbers. Jensen also noted during the call, I just caught the very beginning of it before I started filming this. He noted that there's still plenty of demand for, chips that are currently in force. He sees that AI is only accelerating. There's mention of the multimodal thing again, and the demand for lots of basically compute to train models at a high degree. So anyways, that's all I've got for you on today's episode. If you enjoyed it or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. I think the thumbs up button is maybe closer to that side. Regardless, I hope you all have a green rest of your trading week, and I will see you in the next one.